Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of October the 24th, 2011. Now, to get started right away, we're going to begin where we always do with the US dollar index. We can see that we have a fresh sell signal from Vantage Point. The triple EMA has crossed to the downside, and we've had a couple of fairly significant retracements back up to this key level at 77.63. Now, number of concerns here. This sell-off in the dollar is basically rumor-driven. It's further driven by things that are happening in Europe and the hopes that this will be sorted out. Potential talk of QE3, which of course I don't think is realistic. So a lot of noise in the market right now, so we have to disregard some of this, at least some of this. Now, the dollar does tend to follow in patterns. You can see that it doesn't go straight up and it doesn't go straight down. There's these little wave-like things that are happening. The dollar predominantly quite strong at the beginning of each new month, and in my opinion, this will start to level itself out. Now, we will have to clear this 77.63 level, if I'm correct, towards the latter part of the week. But again, I think that events in Europe are going to overshadow most technical indicators at this particular point. So what I often do is look at what the market was doing prior to this noise that's come into the market. And what it was doing prior to that was a very clear and powerful uptrend on the dollar. My view is that this will likely continue once we get past Wednesday of this week. Things come out of the Eurozone. Whether they kick the can down the road or not, I really can't say. More than likely, they'll put a Band-Aid very similar to the TARP fund in the U.S. I don't think they've really fixed anything in the U.S., and I don't think that they're going to fix anything in Europe. It's the same problem. So keep that in mind. But again, this could be a situation. Again, I hate to use that cliche of buy the rumor, sell the fact, but I do think that this is what, regardless of what the outcome of the Eurozone is, it's going to likely sell off after these meetings are over. So this brings us into the equity markets. What's happening here? This is causing the equities to push higher. Now, what I want to point out very clearly, what I've done on these past presentations, we are extending lower. We are not hitting higher highs. We are though hitting lower lows. This is what a technical analyst looks for to try to determine what the real trend is. We've had a big move up on this S&P 500, some 10 or 11% over the last several weeks. Clearly, this is overdone. Is there upside potential? Possibly, but I think it's going to be very, very limited. Fourth quarter, often very good for the stock markets, but in this particular year, the debt crisis and everything that's happening in Europe and the general slower growth is going to drag, in my opinion, is going to drag on these equities. That's the likely outcome. Now, they could push it a little bit higher in the short term. This is likely. But ultimately, when you see a big corrective move, a big move up like this, I should say, in a very short period of time that is 100% news driven, then it usually falls equally as hard. So again, we want to keep this in mind. Right now, the Vantage Point indicators are warning us that this S&P 500 is grossly overbought. This is another big concern. So be very, very cautious. Now, if these equities turn and they move lower, which is what I think they will do in the coming days, possibly a week or so from now, then you're going to see the other currencies sell off. You're going to see Australia, New Zealand, the CAD, they're all going to sell off. So be very, very cautious of this. Now, when we're looking at when we're looking at trends like this that are correlated, things that are correlated to equities, things that are correlated to the dollar, to try and get further insight as to what's actually the next move is likely to be, this brings me to gold. And looking at gold and the Vantage Point indicators, I think they've done a terrific job calling this. We are completely tangled up in this Vantage Point 18-day predicted moving average. Previously, 1680, 1685, we could not break this level. Repeatedly tried, and it just couldn't get going. Even though the indicators were in grossly oversold territory, it still failed to break above this level. This is, as of late, gold has been running with the equity move. So we'll see how this one plays out. But right now, it's suggesting those metals are going lower. Silver, the exact same picture. Silver has had about an 80% correlation to the S&P 500. This is failing. Is this a leading indicator for the S&P 500? In my respectful opinion, it is. And this is warning me not to get too aggressive with those S&P contracts and to be very, very cautious buying those risk-based currencies such as the euro, the CAD, the Aussie, the New Zealand, and things of this nature. We can see a heightened strength, which I'll get into in a minute, in the yen and the Swiss franc has started to reverse. This is another warning sign. Looking at the light sweet crude oil, again, are we making a higher high? We are not. We are making a lower high and we are making a lower low. This again is indicative. This is not indicative of dollar weakness. This is indicative of dollar strength. So, and again, the crude oil contracts 100% correlated to the S&P 500. So unless this trend can start pushing higher above this 90 level, then I would not get comfortable with longs. Even though the Vantage Point indicators are doing a pretty good job calling this short-term strength in the light sweet crude oil, we can see this one lone candlestick just a few days ago, I believe this was Wednesday or Thursday, poked below the 18-day predicted moving average from Vantage Point, and that again is a warning sign. Looking at these candles, they are not making higher highs. They are making lower highs. So we have a lower high, we have a lower low, and then we on the overall charts, we do have some looks like some pretty stiff support down here in this 75 level. So I would look for this thing to start ranging between basically $75 a barrel and $90. That's what I would be looking at. If we can break clear of this 90 level, then the equities are likely to push higher to potentially 1250, 1280. Light sweet crude oil would probably move towards $95, $96 a barrel. I see that extremely unlikely under the current market conditions. Now, this brings us to further leading indicators. The Japanese yen currency futures. We've had a big spike up on Friday to the upside. Now, there's a number of different things that may have caused this. Stop loss hunting is one in the dollar-yen currency pair. The potential for everything to just be rosy again in the Eurozone, we know that that's unrealistic. So we have to look at all these different things and decide whether this is a true rally in the yen or if this is a false rally. My opinion is it's likely a false rally, and they're going to continue to try and run stops. But it does warn us, usually what